Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday morning pre-market webcast. Okay, so I'm a broken record, but it's playing a pretty good tune as far as how we've had this week planned out. We discussed on Tuesday, another day, another high, daily pivot support. Monday and Tuesday, the bulls needed to convert 2750. They did that. We rejected off of 58 to 60. Bears needed to keep up the pressure. They could not do that. So what they did was they created higher lows at 36, 44, and we talked yesterday morning about how that 2760 high, in my opinion, was going to get taken out yesterday. So they took out the high. We've done another leg up, and now what they're threatening to do is what's called a secondary band ride. So you've got your upper band ride here. It took a day off here. It rejected the 3650, made a higher low at 44. Re-engage the upper band here, and is engaging the upper band now. Secondary band rides are flaming panic short squeezes, typically, whether they're on the upper band or the lower band. I'll be interested to see if that follows through today. With respect to our distance between price and the 45-day pivot, our baseline number coming into the day was about 70 handles, or about 70, I think it's 70.83 handles above the 45-day pivot. That puts us into the overbought area. Not crazy town, not bet the house, but we're more than stretched, and now we're overbought. We were overbought back when we got into 55 and went up and did 60, and then we did a little bit of a move back from there. So today for me is a very interesting day to see what kind of pushback we get from the Bears, if we get even more follow through out of the bulls. We were long, we've been long. I just took my long off. The room was long from anywhere between 55.5 and 57.5 from yesterday. So, we've booked all that. So I don't plan on doing anything with the room until we get into the regular session. And then we'll just come into it with an open mind and see what either side can do to make some progress today. My other concern is, the market may need to rest a little bit. We've really pushed up hard, a hard 40 handles up off of that 36.5, and we may do a little chop today. If the market starts chopping, if it settles into some kind of a 4 or 5 handle range, my suggestion is you don't do much at all. Let's look at the hourly chart. More of the same, right? You can go back to, here's 2018. Here's New Year's Eve, okay? We tested the daily mid-band support, okay? Converted that weekly pivot, and it's been nothing but mid-band support, daily pivot support, and me, copying and pasting the terms new all-time high into various highs related to the market. This is the last couple of days. You saw daily pivot support on Monday, daily pivot support on Tuesday. You saw the pushback. There's your all-time high at 60, okay? There's your all-time high at 60. You get the pushback. This was their chance. This was the Bears' chance. You go daily pivot resistance, but then they buy that dip. Then when they do this one, you got a higher low on pretty much all time frames, and that really launched it. First in a glide, now more of a ramp up into the 76s. So I'll be interested to see on any pullback what the hourly mid-band's reaction is to price. Daily pivot is well below today, down at 62, and the weekly pivot is a distant memory down at 27.20. So we'll see what they have. Okay, everybody have a fantastic day. Have a fantastic weekend. I will be back with a wrap-up later in the day. Trade them well. Take care. Talk to you then. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.